Like all industries, financial services must play its part in helping the world move towards a sustainable future. Investors globally control significant volumes of capital and as such have influence over some of the world's largest companies, which is why we believe that active investment and active ownership is so important. ESG stands for environmental, social and governance. These are vital factors that must be considered in the management of any company. E for environmental covers climate change, deforestation, air and water pollution. Under S for social, this covers human rights, labour standards and the impact on local communities. And under G for governance, covers diversity, bribery and corruption, and executive pay levels.
The power that shareholders wield with regards to influencing corporate behaviour should never be underestimated. There are a range of factors that investors can take when they are addressing ESG risks and opportunities within businesses that they invest in. So two key methods that we think are absolutely vital in driving ESG agenda points forwards are engagement with the companies themselves and shareholder voting. So effectively, as a shareholder, you are a part owner in a business, and what this does is it carries the rights to vote at company meetings, which ultimately gives you a say in how that business is run. So what we believe is really important is embracing the power whilst accepting the responsibility that this brings. So what's really encouraging is that companies are quite in tune with investors who control the flow of capital, and therefore we are seeing more and more businesses becoming increasingly willing to comply and address ESG factors within their relevant sectors.
We do not consider ESG to be just an obligation, but actually an investment opportunity. By utilising our shareholder power that we receive as investors, such as active engagement with management, but also shareholding voting rights, we can work with companies that are looking to transform to be more sustainable in the future. This will help us as investors to reduce the risk within the portfolio, but also provide opportunities for these companies to be more profitable going forward. By focusing on industries that face some of the greatest ESG challenges, such as oil and gas and mining, we can actually help to drive change in this industry. This allows us to actively help to change behaviours within these industries and pivot towards being more sustainable. Instead of ignoring these companies and sectors and screening them out from our portfolios, we believe it's more important to include them but work with them actively to help pivot their businesses.
As your investment manager then, it's really important that you know we're looking for these ESG factors in the funds that we select in your portfolio. What we look for is demonstration from the underlying funds of engagement activity, voting activity and track records on anything related to pushing the ESG agenda forward. What this allows us to do is provide you with real-world examples on a monthly basis on our fact sheets of ESG in action within your investment portfolio. So a lot of investors think that actually as an individual they have limited impact over a corporate's behaviour, and to a degree that is true. But what's absolutely important to remember is that there's very little that investors cannot achieve when working together. And collectively, investors control a vast swathe of capital, and that really does have the power to impact businesses' decision making now and into the future.